finally, September update from Siky Real Estate. So a lot of things have happened this month. So one of our students bought his fifth and sixth rental property. We had a house that was on fire. Money was burning. We put out the fire and started making money on that again. Then we have another property where we might have some problems, but we still don't know about that. Then we have the income for the month. We have some new spreadsheets that can be used to calculate the cash flow and how profitable our properties are. But let's get started with the update. So we had, unfortunately, to pay some tax. So that's one of the things I encourage quite a lot, is that the more successful we want to be in real estate, at least in Denmark, the more tax we need to pay. Because the more tax we need to pay, then we can show that we're making a lot of money. If we don't pay any tax, then it's a little bit difficult with the financing. At least it gets a little bit more difficult unless we can show the bank why we're not paying tax. So we had to pay $17,778 in tax last month, and that kind of sucks. The business tax is a little bit lower than the tax you have private. So in Denmark, it's around 20%. So we're one of the higher taxed countries in the world. So when we compare our revenue from September 2024 to September 2025, then it's gone up with almost $3,000. So it was $27,712 last year. Now it's $30,531, and that is okay. So it's the same amount of properties compared to last year. So that means we increased the inside value of the company, and that's something people often forget. I forgot to introduce myself. My name is Palle. I invest in properties with my wife. We have 18 rental units right now. So this graph shows 16 of them. But the enterprise value is when we take something we already have and then we increase the revenue. So often we need a certain amount of properties in order to make money. But then when we have this amount of properties, then it's often good to look at the enterprise value and look at can we make more money with what we actually have? So that's been the focus for the last year. So we made this $2,300, and you can say it's not that much money, but it's actually it's just free money. It's only me and my wife in the company. So for us, it's okay, right? Because it's extra cash. And when all expenses are paid, that's just extra money you get. So that's actually pretty cool. If we look at it and we have 16 properties, I know a lot of people on the internet would go with the graph, would put it like this. So they would be oh, it's like this, right? but it is the difference is up here, right? It's not a crazy big difference, but for us and our household, this is actually a significant amount of money to have extra in a month. I think it's significant. You can write what you think about the number in the comments below. But in the past month, and compared to last year, we had 13.5 houses that generated this revenue. So that means our revenue per house was $2,240.07 per house. So that's okay. In this month, we got our first rental property back. So it was condemned by the local municipal. So for 10 months, we couldn't use the property. So it was burning cash. Fortunately, before that happened, we were fighting with the municipal. Then we used it for Airbnb booking.com. So we actually managed to get the money back. But the thing is, we got it back on the 11th of August, and then before the 1st of September, then we actually managed to get a revenue of $1,787.82. So that is actually okay. Then we have another property where the municipal are fighting us. They were trying to condemn that one too. should have been condemned on the 1st of September, but that didn't happen. We didn't hear anything. So right now we're waiting, and we should get, so there was like a hearing. We answered the hearing, and then they're going to make a decision next month. So we'll see what happens with that. Then we rented out 2 of our properties. So our second property, and I think it's our 12th property. So we rented them out for $2,515.51 and $2,201. That is actually quite good, because these properties were not that expensive, but it's not something that happened like day by day. It took us a few years to find the clients that would rent it for this. But then when you make more money, then you get more money you can spend on fun and like investing. So we had, when this month was over, we had like, after the bills and stuff were paid, we had like $5,299.62 that we could spend on investment and fun, right? So fun is not giving my daughter a can of Coca-Cola. It's not open. She's only drinking milk and water. But I just found it's a fun picture. So my work phone was kind of dead. So what I did was I sort of wanted a new phone. I wanted the green one, but the green one didn't have enough space. So I went with a blue Pixel and a phone and some earbuds. So when we totaled that up, then I spent 15,000 Danish crowns on the phone and 1,500 crowns on the watch. So they're like eating the cash. So we need to always like consider, is that the investment we want? But the more money we make, right? So like it has taken like several years to get to the point where we are today. But then it's like okay to take the money and like do that, as long as we also pay the tax I was talking about earlier. Then our 7th rental property, we spent some money buying a new stove and oven and a new fridge. So we had a tenant. So that's like, some of the things is sometimes the tenant smashes your properties. It does happen, but it's not that often. So this is like, it's happened once in 6 years, but that's just part of the game. So we need to put some money aside if something like that happened. Then we had a little bit of fighting with the local municipal, and then we were like complaining, and then the the complaint went to like another place, and then they decided that the municipal were wrong and should give us some paper. So they gave us like 4,500 pages of paper. That someday, when I'm bored and have like nothing better to do, I should read those papers and see like what was it that they didn't want me to see. We've had a Danish course with like strategy and financing of properties for 5 years, and we've been selling some spreadsheets. And one of our students, he just bought his 5th and 6th rental property. So that's actually pretty awesome. The bank gave him a credit for $440,213, and like the profitability on the purchase price that they want to finance. So they financed the all other 4 with like a 8.5 ROA return on assets. So that is actually pretty cool. So because he followed the strategy we have in the course, then he had cash on his bank account, and then actually the bank would give him a credit instead. So they gave him a credit that has an interest rate of like 4.75%. Then with this credit, then he's able to just like take the money, buy the house, renovate it, and then they can refinance it again. So that's actually like a pretty cool deal, right? So he has this money on the account. He can just take the money, use it on the houses, and just flip them. So he was almost like buying 3 houses. I told him, we need to have the systems perfected. So I said 2 houses is good. Do 2 houses, do the same thing. And then you also show the bank that you're not just spending every single crown in the bank account, right? But I know it's like, ooh, you're excited, right? The bank is like giving you money. You want to buy everything. But a piece of advice is to take it easy. Do not run out of cash. Like, it's the same thing. Then all of a sudden you need to pay tax, and then there's no money on the bank account. So we need to be aware of that. So we have our new spreadsheets. If you are interested, Siky Spreadsheets 2.0, there's a discount code. It's called Founder if you want 50% 20% discount on that. But that was just a small update from the month of September. To write what you think in the comments below. Also, thanks for watching. Have a wonderful day. Bye bye.